Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we've got another trade breakdown video for you, this time on EURCAD for roughly 140 pips. We'll go through the complete process of the trade, how I calculated my bias using higher time frames, how I analyzed the 4H chart, entries, entry confirmation, management, take profit. All of that will be covered in today's video. So if you are enjoying the content, guys, please be sure to drop a like and subscribe. Without further ado, let's get into the video. So as you can see, this is the EURCAD position. I took this one last week. Lovely move to the downside, roughly 140 pips. So again, let's start from the top. Let's bring the replay tool out to what I was looking at before the trade, and then we'll look for entries and all that good stuff. So let me move this daily candle as well, because that is the day that I got into the trade. So the thought process was very simple. I was scaling to the higher time frame just to see what's going on with the daily, the weekly, and the monthly. I don't really look into weekly and monthly too much, but I just have a look-see sometimes just to see what's going on. But daily is kind of where I fixate for my high time frame kind of narrative and bias. So the daily, what I got from this one was overall kind of just sideways. So when the market on the high time frame is moving sideways, instead of just focusing on the trend so much, I kind of look from level to level. When the trend is strong and we're seeing higher highs and higher lows, a lot of bullish momentum, or vice versa, the market's trending aggressively to the downside, then I can look at momentum, swing highs, swing lows a lot more. But when the market is kind of overall sideways, you can see we're getting a mixture here. We're getting some higher highs. Now the market's forming some lower highs, got some equal lows roughly down here. So there's not really a comfortable trend that we can just look at the market and in the first 5 seconds spot. It's a bit more all over the place. So when the trend isn't as clear as with this one, I just look at level to level. So I map out where the most prominent areas where the market is rejecting, and I kind of just map out the levels, and I sort of try to trade in between. I look for my trends in the lower time frames like the 4H and the hourly for my entries. But when the daily is kind of ranging, or when it's not as clear in terms of the trend, I just focus on the main areas that the market is turning from, the main turning points in the market, and I trade between them. So on the daily chart here for EURCAD, what I got was that we've had a bullish trend here. The market's had a really steep correction to the downside, breaking through these lows here, but it's having trouble creating new higher highs. So as you can see here, this is a lower high compared to that high. Let me mark that on. So we had the original higher high up there. The market comes down, forms another lower high, and again forms another lower high over here. You can see the market's trying to push higher, but we're failing to do so. So what was happening was a very confident bullish trend. Now it's starting to turn slowly bearish. So I wasn't necessarily okay and bearish in EURCAD. It was more sideways than anything, but I can see that the market is starting to show some signs of fading to head higher and continue this uptrend from a few weeks back, and could be looking to move to the downside. So what I'm seeing from this perspective is that, okay, maybe we could be seeing a move lower. Where's the next key level that the market could be attracted towards? Well, clearly this level here, we're not too far away from it already. This would be the next logical place EURCAD would come to. And of course, if you can break that, probably these lows here as well. So just looking at which key levels the market could be attracted towards. So dropping down to the 4H time frame, let me just delete some of this out of the way because we don't need it anymore. So dropping down to the 4H time frame, which is where I'm really looking at structure, swing highs, swing lows, looking at some trends, and actually mapping out a setup. That's where I do all of my hard work, mainly on the 4H. So on the 4H time frame, what I saw was originally we had some consolidation. I remember we were talking a lot about this on the streams. The market was moving sideways, equal highs, equal lows. So I wasn't looking to trade within this area here until we got a breakout. And finally, we did get a breakout. We got a break to the downside. This was kind of a big fake to the upside. Again, big fake out, taking out the highs there. Anyone with stop losses here would have been taken out. And again, that's what we see happen time and time again when the market fakes one way to go the other. 80% of the time when the market fakes one way, aka breaks resistance or breaks support and then breaks back inside again, we expect the market to head in the opposite direction. That's exactly what happened here. Big fake to the upside, market then breaks to the downside. Not the most impulsive break in the world, but we do clear this level of support, and as you can see, we start forming some lower lows and lower highs. So as long as we maintain this bearish structure here on the 4H, I'm anticipating the market to come back and test that support. That's as simple as it is. As long as we maintain this bearish structure, as long as we continue with these lower lows and lower highs, I'm expecting us to reach our next key level on the daily, which will be this level just underneath us over here. So we've got a pretty high chance that as long as we don't break structure and do something like this suddenly on EURCAD, we most likely will come back to this support. So in terms of the probability of price getting to that target, it's pretty high. So what I'm looking at is seeing if I can get onto a lower high somewhere and ride it back down to that support. But the way I trade, I look to kind of average out my risk to reward around the 1 to 3. So I did get my entry on a retest of some structure here. So I was looking for the next pullback. This is where we got the pullback to. Price tested that area, and then we had a drop to the downside, and we came back and retested a nice trend line. Let me mark out the full H again. So we had a nice trend line here. Again, consistent lower highs, 1, 2, 3, 4, 5. And we came back into that same area, double topped it, beautiful rejection to the upside with that wick, and a nice bearish engulfing candle. And again, if you haven't seen my content before, I'm looking to always enter on bearish engulfing candles or bullish engulfing candles, which show a nice shift in momentum. And I especially love the wick there to the upside. I think this was CPI at the time as well. We had some news, big spike to the upside. Market just took out some highs here as well, and retested my area of confluence and gave me a nice entry signal shortly after. So that's why I got into the trade. All I'm looking to do is basically catch that next lower high on the hourly chart, full H chart, looking to catch the next one. This is a strong area of confluence, and we got a healthy rejection there. So that was the entry signal. Stop loss just a few pips above the high. And of course, first target was back to that same daily level, which we've been talking about, which is this level here at 1.45. But of course, like I said, I look to try and average out my trades around a 1 to 3. I do take partials, so my overall profit at the end is not always a 1 to 3, but in terms of my target for my final take profit, I love around the 1 to 3, sometimes a bit more, sometimes a bit less, but that's kind of where I want to average out towards. So if I do bring this back up here, you can see that risk to reward, if I was just going to target that daily level, would only be a 1.17. So that's not quite doing it for me, but nonetheless, it's a great first target to have, because for all I know, price could come back into that level, reject it, and then possibly reject and continue against me and take me out for a break even or a loss. So this is where I want to take my partials and go to break even. And if we potentially get a breakout and go to the next key level, that is fantastic. So that was my first take profit. So if we press play, you can see price originally was moving a little bit sideways, and we picked up some nice momentum. We had some euro news at the time, I'm pretty sure. I think we had some dollar news shortly after as well. So it was a really nice move to the downside, breaking through that level. So when this came in, I went break even, put my stop loss at break even, took some partials there. My final target was coming into this area of momentum on the full H time frame. So as you can see here, underneath this level here, the next key area is definitely this point here. You can see that the market was very sideways, and from this point a lot of momentum came to the upside. So I knew there's a good possibility that we could come and react to that area. Again, I'm not trying to push my trade too far. Again, the next key level I've got on the daily chart was definitely this level here, as we can see, but I wasn't trying to push my trade that far because the risk reward there was around the 1 to 5. Although sometimes I do push to 1 to 5, but knowing that the high time frames are sideways, I'm not trying to be too aggressive. When the high time frames are sideways, I'm trying to be more conservative with my take profit levels. If there's a confident trend in the high time frames and the high time frames are very bullish or very bearish, and I'm trading in that direction, then maybe I can get away with it. But in these conditions, I want to be a bit more conservative with my take profits. So when we're coming into an area of value as such here on the left, you know, this is a confident area where price could react from. And if we measure it with the risk reward tool, you can see we're about a 1 to 2.87, which is more or less around a 1 to 3. Again, it's not going to be perfect. I'm not trying to aim for 1 to 3 on the dot every single time, but roughly there, sometimes a little bit less, sometimes a little bit more. Around that area is a soft spot. And again, looking back at my data, going back over my back tested data, I'll notice that around the 1 to 3 is when the market tends to reverse against me. Sometimes, of course, you do get the bigger moves which go 1 to 5, 6, 7 and beyond sometimes. But I know on average that the market tends to reverse around the 1 to 3, depending on my stop loss size, around the 1 to 3. So I'm not trying to overstay my welcome. And I know that if I'm consistent with those take profits, I can even have a 40% win rate, and that's with taking partials as well, and still be profitable in the long run. So that's where I want to be taking my profit most of the time. And this was a lovely place to do it in reference to the market we're trading here, which is EURCAD. So as you can see, eventually we get the take profit, and the price smashed that level, and that's why I completely exited the trade. And price did fall a little bit further and eventually go and hit that second daily target there. I actually missed a nice pullback yesterday on a retest of some structure here, catching the next lower high for this move, but I wasn't trading yesterday. I took the day off, but nonetheless, a beautiful move to the downside. And again, the key lesson that I want to kind of illustrate in this video is that, because if you look at a lot of my other trade breakdown videos, a lot of them, the higher time frames are pretty clear in terms of there's a bullish trend or a bearish trend, which I'm taking advantage of, dropping on the lower time frame. However, in this case scenario, there isn't so much a trend that I'm taking advantage of, more so this price coming to the next key level. So when we can work out which key level the market is most likely to come into when we are ranging, you're pretty much looking for trends on the smaller time frame and just looking for buys or sells into that same level. And that's kind of what I was looking at with this position here. And of course, you can see we broke through that level and pushed into the next key level. And for EURCAD, we're probably going to come back into the lows here, which is just underneath this current level here at 1.42300. So I still think there's a little bit more downside left for EURCAD, and then we see what happens here. It's actually forming like a very, very big head and shoulder pattern, left head. So if you can break through this kind of neckline area, there could be a lot of downside for EURCAD, possibly looking at mirroring this move here. We could be seeing that down. And again, if that does happen and we start breaking through this and we're seeing a confident bearish trend on the daily, then yeah, then I can be a bit more aggressive in my take profits, maybe push it to a 1 to 4 this time. Again, nothing too crazy, but I can, push it a little bit more aggressively when the momentum is in my favor. However, with that trade that I just took last week, higher time frames were a little bit more sideways. So hopefully that made sense, guys. Again, you can see the pattern on my trades are very, very simple. All I'm looking to do is catch the next low high on areas of confluence. So in terms of the entry, it was pretty straightforward, just looking for a push back into this broken support, turn resistance, spike back into that trend line there on the double top. Nice wick to the upside after CPI, bearish engulf confirmation. And that's where I'm entering my trade. Stop loss just a few pips above the high, just in case we come back for another retest. And first target was into the next key level on the daily chart, which is this swing low, 1.45. And I was looking at this strong area of confluence there on the left for the final take profit for roughly around a 1 to 2.87. But of course, with my partials, it was roughly around a 1 to just over 2, like 2.1, because I did take partials earlier on. And yeah, that sums up the trade itself. Very, very simple, but effective when you're just waiting patiently for the right moment and then striking on that. And guys, if you have enjoyed the video, please be sure to drop a like and subscribe if you're finding this useful. Let me know if you have any other video recommendations for the channel that you want to see. Drop it down in the comments. But nonetheless, have a fantastic day, guys, and I'll catch you all in the next one.